Ladies and gentlemen, the S&P 500 sees the best week of 2023. The first week of November ends with 5.85% in the green. Now, is this just a fake out? Is this just a bull trap? We're going to get into it in this video, and I promise you, you will have a better answer at the end of this video than you did before you started this video. But this is part of the reason why I was saying in my video from a couple days ago, you do not want to short at this level. It is not an optimal short. Even though we saw a couple of red days thereafter, we then saw the greatest 5-day run of 2023 so far. We left a lot of gaps behind, and I'm here to answer the question, or help to answer the question, of whether this is just a fake out, look at it from a historical perspective, and also using all of the data that we have surrounding rate hikes. Is this the last rate hike? In my belief, in my view, I think we already saw the last rate hike of this rate hiking cycle. And I think that the Fed is just going to pause in December and just hold for longer. What are the implications on the market? And of course, you guys always want to know what my plays are. How did I play this? How am I going to play this going forward? And as always, I leave the plays until the end of the video. You definitely want to check it out. For those of you that are new to the channel, welcome to the Traveling Trader, one of the first and largest trading communities online. We've taught 20,000 plus traders how to navigate the markets, futures, options, spreads, option selling strategies, day trades, how to identify long-term holds. If you're interested in any of that, check out the first link in the description below with the coupon code to get your membership for $99 a month for the rest of your life. Let's get right into it. So why was I eyeing this level on the S&P 500, and is this a bull trap? Let me answer that question first, why I was eyeing this level. If you take the volume profile tool and you drag it all the way back to January of 2022 when we hit all-time highs, you could see that this 410 level is the heaviest volume we've ever seen on the SPY, going back to all-time highs all the way until now. So I was eyeing that level because this just clearly shows that there is a ton of interest there, whether it's institutional interest, retail interest, or both. This level is hyper important. Obviously, it coincides with, for those of you that trade, it coincides with this very visible consolidation level that we saw back in April 2023 all the way until May, and then beforehand in January 2023 as well. This is a very major consolidation level. Also, this was resistance, and now it is acting as support. So I expected a violent bounce from there. That is why in this video, I said, watch out if you're going to short here. Now, I didn't mean that the market can't drop for another couple days. Obviously, it did. I'm just saying it's not the optimal time to establish a broad short position for the long term because I was afraid of this bounce. Now, I'm not just here pontificating and theorizing. I put my money where my mouth is. October 25th, I said, looks like we're nearing the 410 target I was hoping for on the SPY. I'd be a buyer of the SPY at 410 and 400 for the long term. The other point of confluence for me was this head and shoulders here. I'm just going to draw it very sloppily, but we tend to see a drop from the head and shoulders almost equal to the head to the neckline, which put us around this level. So there was a lot of confluence there. Was it the bottom? Is it the bottom? Obviously, nobody knows for certain. I'm not Doc Brown from Back to the Future. However, it is a great buy point regardless of what happens. This is what I try to tell people, okay? When we're in a correction, when we're in a bear market, those things are 100% certain, meaning the price that you see on the S&P 500, this price that you see right here is 100% certain because it's realized. It's right in front of your face. Whether we're going to drop further, whether we're going to have the worst recession of our life, whether the US dollar is going to just go up in smoke, that stuff is all just conjecture. Nobody knows. What I do know is this represents a good buy point for me for the SPY for the long term, so I'm going to take advantage of it. Theorizing on what's to come and the worst drop of our life, I mean, that's always going to happen. The problem with perma bears is they have a bottomless target. There is no target at which they are eyeing. And sometimes they do have a target, but that target oftentimes is also unrealistic, right? So anyway, that's the way that I view the markets. Do what you want, right? If there's a price that I want for a blue chip stock or index, I'm going to take advantage of it. My eye was at 410 for the last 2 months. We hit 410. I'm definitely taking advantage of it. And I'm glad the rest of the crew in the Traveling Trader community took advantage of it as well. So I'm here to answer or help answer, because obviously nobody knows for sure, but was this the bottom? Was this the bottom of the correction? Do we just go up from here into the Santa rally all the way until next year, until we hit a recession? Well, luckily, we do have some data points here that are going to help guide us, okay? Again, regardless of what happens, I like this buy point, right? Now, have we seen gap ups recently, and have they been resolved? Meaning, have we then seen, declines from the gap ups in order to resolve these imbalances? Well, you don't always get them resolved. Look at March. We had a similar string of gap ups, right, into an area of consolidation, and we never went back to resolve it. Now, why was this? Well, it's because we were in an uptrend. So we have had similar gap ups. If you take a look at September 2022, right, we were already in a bear market. We had these gap ups here that also look similar to what we see now, followed by more mayhem. If you take a look at what happened in May 2022, again, we were already in a bear market as of April, right? We had this string of gap ups, very similar to what we see now, followed by more mayhem. So perma bears are going to point to those gap ups. However, when we are in an uptrend, and you can argue that we are in an uptrend, if I just draw this line here, you could see that we've been in an uptrend since we bottomed, that capitulation bottom in October 2022. We are in a bull market. This is still following the trend line. You can draw an opposing trend line right here. And if you're conservative, you could say to yourself, well, I'm not ready to say that that is the bottom until I see what happens at this trend line. So this trend line is around the 440 plus level on the SPY. But if you told me I'm going to wait until this trend line is resolved, then I wouldn't argue with you. I mean, I think that's pretty prudent. That's a pretty sound approach. I might even at this stage right here, I might even sell call spreads against the SPY in order to anticipate any sort of stagnation, consolidation, maybe a little bit of a pullback. But I would not argue with you if that was your thesis, and that's fine. At least you have a thesis. But when we are in an uptrend, these gap ups usually mean that we have a lot of momentum. Now, I want to pull up something called the Whaley breadth thrust indicator, okay? I'm not going to go into this. You can certainly read about the Whaley thrust indicator. There's a great account by the name of Walter Deemer. You should follow him on X, on Twitter. Also follow me as I post daily trading and finance content. The link to my X account is in the description. But if you want a explanation of what the Whaley breadth thrust is, it is just another breadth thrust indicator. There are a few of them that are respected. This is one of them. It measures the thrust in the market, the breadth thrust in the market. Now, this is not an indicator that puts out wrong readings often. Now, it doesn't call the bottoms, but it does call when there's unusual breadth thrust in the markets, right? When there's an unusual number of advancing stocks versus declining stocks. And if you look at it, every single time that it has appeared, we have not dropped significantly thereafter, right? There was a time in October 2015 when we had that double bottom, right? And we dropped to near the level when that indicator first appeared. But since then, it's rallied significantly higher. Now, the one thing about this is, going back in time, I've never seen it light up twice in 1 year. So we got it in January 2023. Again, it doesn't signify the bottom, so it's not going to show up in October 2022. But we saw it in January 2023, and we are seeing it now. And so, this very well could be the bottom of the correction until we get a recession in 2024, in my opinion. Whether we see a pullback from here, it is very possible if we see a slight pullback here because of this area of consolidation. Whether we just continue higher until we test this trend line is also possible. And you might be saying to yourself, man, how can we go up from here? There's, World War III is about to happen and the economy's in bad shape and, whatever, yada, yada, yada. Well, look, the stock market was clearly that there was a lot of fear, right? This is something that we highlighted here. I want you to take a look at this right here. This and I've showed this before, you have the fear and greed index, right? So there was a lot of fear in the market. And the NAAIM exposure was at a low since October 2022. This is the National Association of Active Investment Managers, right? Basically, an index that measures institutional money. Their exposure to the market was near a low. There were a ton of shorts in the market as well. If you look at the net short position here, it was at a historic level. And as you know, when we see massive shorts, that tends to fuel a short squeeze once the buying starts. Follow Markets and Mayhem on X, by the way. This is a very good follow. And that is the reason on October 26th, I said the one thing I can guarantee you about this stock market crash is that most retail will not buy. When the market rips, it'll be fast, violent, and surprising, just like it always is. Right? I'm not Nostradamus. I just know how these things work. When there's extreme fear in the market and the market has these oversold indicators and there's a ton of shorts and all of the news that is priced in has already come out, and we are at major volume levels like this one, right? The most volume going back to all-time highs is at the 410 level. That fuels the conditions for a violent bounce. Now, if we do start dropping from here and we have one last drop, then what I'm expecting and where my next buy level is at the 50% retracement of this entire rally, which is at around 404 on the SPY, right? And would be the absolute bottom of this consolidation channel here that we saw back in March, right? That is where I would buy heavily next. I'm not saying we're going to get there. It is very possible, again, that this is the bottom of this correction. It's very rare that we go from bear market to bull market back to bear market in the same year. That's actually not only rare, it's unprecedented. It's never happened. And lastly, the reason I think for also the markets to rip is because the Magnificent Seven, which has held up the markets, the Magnificent Seven all reported okay earnings. NVIDIA has yet to report. They report last. And yes, a terrible earnings report by NVIDIA can, worsen the pullback or the correction, but the rest of the stocks didn't have terrible earnings. They weren't great. They were a mixed bag. Some were okay, some were good. A couple of them were whatever, like apples, right? But we saw mostly double beats all across the board in the Magnificent Seven. So the fact that they were all down, 15% down on Apple, 31% down on Tesla, you can see the list here. My point was that if earnings weren't bad, then these can fuel the rest of the market. Like these can start to rally from the corrections that they are in, because these are in corrections. Two of them were in bear markets, right? They can start to rally and fuel this S&P 500 from this level here. Now, why do I think that that was the last rate hike? If you look at unemployment, unemployment is now 3.9%. This is the highest that it's been in 2 years. Unemployment is ticking up, which the Fed actually wants, right? The Fed actually wants unemployment to go up to cool off the labor market. Also, we've been tracking wage growth. Wages are tanking just like the Fed wants. We went from an overall unweighted wage growth tracker of 6.7%. We're all the way down to 5.2% in September. So the next numbers should actually be even lower than that. So wages are tanking and the unemployment is going up, which is what the Fed wants. And if you take a look at the probabilities now for December, they are exponentially, overwhelmingly on the side of no more rate hikes. The market is not pricing in any more rate hikes. And you can see here, it went from 79% last week to now 95% that the Fed is not going to raise rates because of those data points that I was talking about, right? So I think the Fed is done. Now, what does this mean? We've seen this before, okay? I want you to look at something. Let's take this back to 2006. Some of you probably were born not that far before that, right? Not that much before that. But if you take a look at 2006, June 29, 2006 was the last rate hike, okay? Now, it's important to note that if you go back to the FOMC meeting of June 29th, they didn't announce that that was the last rate hike. So I found the publication here, Fed hikes rates again. Central bank policymakers raised key rates to 5.25%. Some investors see hints of a pause in increases, but if you read this, it's the same, yada, 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 that it's going to be data dependent. We may raise rates. They never raise rates after that. And if you look up all of the FOMC meetings after that, you could see that they're saying it's data dependent, but investors are now pricing in normal rate hikes. Very similar to what happened today, recently, right? So we saw the markets take a slight dip in July, and then it was just off to the races from 2006 all the way until we got a recession, right? And the recession started in December 2007, somewhere around here. So this is what I think is a potential viable path for the S&P 500, is that we saw the last rate hike. December, the Fed is going to pause. Investors will be like, no way they raise in 2024. We've actually priced in a cut for 2024. They're just going to hold rates for longer, and that is going to help fuel the rally until we get a recession. Now, whether we get a recession in 2024 or 2025, it's so hard to predict because it takes a long time to get a recession. For instance, after the yield curve uninverts, it takes forever to get a recession. If you look at unemployment has to start ticking up drastically before we get a recession. The recession here is marked in these gray columns, right? So we need to get unemployment well past 4% to start talking about a recession. So it could be end of 2024, mid 2024. It could even be beginning of 2025 before we get a recession. Who knows? But this is very similar conditions to what we saw in 2006 as it relates to the rate hikes and the fact that this might be the final rate hike. And by the way, the rate hiking cycle in 2006 that ended was a 2-year rate hiking cycle. Very similar to this one. Very, very, very similar to this one. Everything's very similar to this one. Of course, this rate hiking cycle was a lot more violent. If we take a look at this, you could see the upward trajectory basically from March 2022 until now. This was the fastest rate hikes that we've ever seen in our lifetime, right? So I think the Fed is done. They're just going to hold here and see what happens, guys. They're going to see what happens. Now, in terms of my plays, as I said, if you want the full extent of my day trades, swing trades, long-term holds, option selling strategies, make sure you sign up and use the link in the description. Do not sign up without that coupon code. Do not sell yourself short. But I'm going to be buying the SPY and the QQQ on pullbacks, adding to my position. As you guys know, I'm a big Tesla fan as well. And I also started buying Tesla at the 210, 220 levels. And then obviously before when it dropped below 200, we're also seeing that Whaley breadth thrust indicator here on Tesla as well. So I will be buying shares on Tesla on pullbacks, and I might even engage in poor man's cover calls where you buy a leap and then sell calls against your shares. If you want the exact expirations and the exact prices, strike prices, make sure that you follow me down below. I'm also looking at Tesla, looking to sell calls against my Tesla. You see the Whaley breadth indicator as well on Tesla. So I'm looking to sell calls against this. Right now I'm holding shares. We already sold a round of calls before this drop-off, closed those for, I think, 46% profit. Now looking to sell another round of calls. Once we start digging into this gap, I likely will sell the $12 calls on Tesla, depending on how far into this gap we get. And I'm definitely looking at Jets here. Not a huge position. I'm not a very, very big stock picker. I do buy the indices mostly with a few stocks that I like Apple and Tesla. But I will likely add some position to my Jets as well. And then if you look at PayPal, I think PayPal is finally at a position where you can start a long-term position on PayPal. Obviously, look into the company, make your own decisions. For me, PayPal is not the type of company that is a big holding. Just a small position compared to the rest of my portfolio. I try not to complicate investing, as you guys know. And I will also likely be selling puts on certain things on pullbacks from here. Anyway, let me know in the comment section what you think. I'm always interested to hear your guys' perspectives. Let me know what you think of the analysis. Do you think that this is just a bull trap? Do you think that we are headed for much lower? Do you think that that was the bottom of the correction? We're headed for much higher. Let me know what parts of my analysis you agreed with or disagree with. Love to hear from you guys. Again, use that coupon code in the description if you want to follow every single one of our plays. And if you want to join Mastermind 3.0, I almost forgot, make sure you get your name on this Black Friday waitlist. You will be sent the ultimate deal if you are approved for Mastermind 3.0. Nobody outside of this list will get this deal. So if you are interested in joining Mastermind 3.0, make sure you get your name on this list. Otherwise, you will not see the deal. And you will get emailed updates to this. Anyway, traders, if you got anything out of this video, give it a big fat thumbs up. Leave it in the comment section below. As I said, subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.